Hi, welcome back to our YouTube channels. I'm always being asked this question: what is the main difference between stocks and futures? And when should we trade stocks and when should we trade futures? That's the reason why I'm going to repeat this topic, but in a more detailed manner, because previously I covered before. But now I hope that this particular topic will help you to solve your question about when should I trade stocks, when should I trade futures. So the first point that you need to understand is the main difference between stocks and futures, and subsequently you'll understand when you need to trade stocks, when you need to trade futures. I'm going to summarize into 5 main differences, and let's start with our main differences. But before that, as usual, my name is Ting Ting. If this is your first video, please remember to subscribe to our YouTube channels and on your notification bell. And before we start, please, I'm going to start with this disclaimer. Our topic for today is only meant for education purposes. There's no buy or sell call. Now let's start with the first difference. The first difference is about in terms of the form and nature. Now you can see that in terms of the stocks, it is like representing your ownership in a company. So you are a shareholder. When you bought a company stocks, you are like running the business with a team of people, with other shareholders as well. So you have the ownership in a company itself. This is some things that you can see. But when it comes to futures, futures basically is a contract or an agreement that you are going to sign. So that's why you are going to see that if last time during your days, right, I'm not quite sure how old you are, during my days, right, when we, for example, bought the stocks, you need to see that the certificate is there. Then futures is very different. There's a form for it. So you are going to see that futures itself is an agreement. So you're going to define, like for example, when you're going to deliver this particular contract, when you're going to deliver, how heavy is the contract itself, how much is it, the value, everything. So basically, futures is a contract or an agreement. It doesn't represent any ownership itself. It's just that when we are going to transact, how much we are going to transact, what is the price that we are going to transact, what is the amount that we are going to transact. This is everything defined in that. So you can see the main form and nature differences. So another thing in terms of the form and nature that you can understand is, let's say for example, when you buy a company, you buy a stocks, you have an ownership in a company. But today, if you decided that I do not want to pick which companies to buy, you can go into futures itself. Because like for example, if you're buying or one FKLI, this futures, index futures itself, you're buying, basically you're representing, you're buying 30 index members. So you don't need to pick. It's a whole basket of it. So this is the main difference in terms of the form, or what we call it as the nature, the difference between stocks and also futures. Now the second difference is what we call as expiration date. What does this mean? Now when it comes to stock, you do not have expiration date. Today I bought, I can hold these stocks for 30 years, 40 years. I pass it over to my kids. So there is no expiration date towards that. But as a nature of an agreement or contract, you know that for example, today you sign any agreements. Let's say I sign an agreement to rent a house. There's a date for me. There's an expiration date for me to exercise the contract. Am I correct? You sign, you want to rent the house until 31st of December 2023, for example. So when it comes to futures, because of the nature of agreement, futures is a contract, is an agreement. That's why there is a specified expiration date. Although you can still hold what we call, you can still hold after the expiration date. There's some technical things that you need to do to renew your contract. But basically, futures itself, there's an expiration date. So you need to understand the main difference between stock and futures, then you will understand what you need to do. Because sometimes certain things that you are going to do, you need an expiration date. You're not going to hold forever, for example. So with that, it will help you. Now, the third part is in terms of trading opportunity. When it comes to stocks, you can see that this is the main difference. Stocks, you can only profit from one direction. For example, during an uptrend, you can make money. But during downtrend, you can still buy your stocks, but you can't make money. Now, when it comes to futures, you can profit from both directions, meaning you can see uptrend, you can choose to long, you can make money. Downtrend, you can choose to short, you can make money as well. So if you're going to look at the trading opportunity in a way you're saying that like stocks, you can only have one trading opportunity during an uptrend and downtrend, because one particular trend, you have uptrend and you have downtrend as well. But futures, you can make from both directions, meaning here there's one opportunity, here another trading opportunity. So compared to stocks, in terms of futures, you have more trading opportunity. So when you have more trading opportunity, in a way also meaning that there's a chances that you're going to make more profit from this futures itself. So these are the main difference. Now, the fourth difference is in terms of leverage. When it comes to stocks, not easy for you to get leverage, provided you are using a margin account, but a lot of restriction when it comes to margin account. Similarly, you can see like, for example, just now, item number 3, the difference. Although people say that as stocks, I can still make money during a downtrend, for example, via IDSS, intraday short selling, or RSS regulated short selling. But you can see that RSS and IDSS, they have a lot of restriction. Like for intraday short selling, you only limit to 1 day. What if you want to hold more than 1 day in terms of short selling? You can't do that. Regulated short selling, you need to go and borrow the stocks. Not easy for you to get it. So these are all the restrictions. It's not that you totally cannot, but it's harder. Now the fourth difference is in terms of leverage. So you can see that stocks, especially in terms of leverage, is harder. Leverage meaning that you use a small amount of money, there's a chance for you to make a huge return. Let's say, for example, you put in 10,000. The chances for you to get 100,000 is relatively high. But when it comes to stocks, you put in 10,000, the chances for you to make 100,000 relatively is low. So this is, when it comes to leverage, it's not common. But in terms of futures, the leverage is easy for you to access. Let's say, for example, your FKLI. One contract actually, if let's say right now our index is at 1,005, you times the 50 per points, the whole contract values is actually 75,000. But today, you just need to use 4,000. You can own a contract worth 75,000. Can you see this? It's easier for you to understand. Meaning, you can use 4,000. There's a chance for you to make 75,000. But don't forget, leverage is double-edged sword. You can make 75,000, but there's a chance for you to lose 75,000 as well. Although the chances is low, because along the way, we have margin call, etc. But you need to understand, meaning you use a small amount of money, you can magnify your profit, at the same time your loss as well. This is what we call it as leverage. Now, the last difference is the purpose. Today, whether you are going to go with stocks or futures, besides the main 4 differences, the purpose itself will also help you to determine, should I go with stocks or should I go with futures? Or during certain economic stage, I'm going to combine these 2 different products. Now, for example, the purpose for stocks is mainly for capital appreciation. You're going for a longer term. When you go for stock investment, you're going for a longer term so that you hope that your capital can be appreciated. At the same time, some of you bought those stocks that is dividend based, they are going to contribute for you consistent income stream. Its dividend is like your interest, but it's just that maybe slightly higher. Comparison wise, normally it's higher than your interest in your FD or even in your saving account. So this is what we call as the main purpose for stocks is more skewed towards capital appreciation and also dividend. Now when it comes to futures mainly we are going to achieve this because you understand previously I highlighted many times that who are the users for futures, mainly speculators, hedgers, and also arbitrager. So let's say, for example, if your purpose today is for you to go for hedging. Now, if you're going to go for hedging, you can't use stocks to hedge. So you need to use futures. So today, for you to understand the main differences between stocks and futures will also help you to understand when you need to use stocks as your investment tools, when you need to use futures as your investment tools, or you need to combine both as your investment tools, because their differences will help you to identify which part that you need to go with. So I hope that this particular topic will really help you to answer the differences between stocks and futures, and will help you to make an informed decision whether by this economic stage or this economic cycles, which tools or which investment products that I need to go with. So before I end, please remember to subscribe to our YouTube channels so that you will be notified when we have a new video. And please give us a thumbs up if you like this particular video. I'm going to see you in our next video. My name is Ting Ting. Bye bye.